Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Looking at Twitter, GoPro X, and CHK on the daily weekly time frame. So Twitter bulls, beautiful follow through. We knew to be looking bullish because the bulls kept back testing and holding moving average support. And what stands out obviously is the very strong close on increasing bull volume. We are not seeing the upper wick of profit taking that we saw back last week, and we are looking at continuation here with all the momentum favoring the bulls. So resistance is now 1858, which broke. So we're now looking up at 1901. If we break 1901, that is a very significant bull break, and we're going to be looking back to the high that we've seen on this breakout back at 1979. Very strong move for these bulls. Beautiful candlestick. You cannot have a stronger candlestick. That's a white Marubozu or a green Marubozu, whatever you want to call it. And the weekly time frame for Twitter, bull break of the inside bar further gives bullish signals. So we're now looking at the 100-week resistance as well. That's going to be just above 1901 at 1913. But the higher low has been established on the weekly, and now the bulls are looking to break the lower highs and continue ascending to the upside. GoPro on the daily time frame. And it's a broken record at this point with what I'm saying, but it's a rejection from the middle Bollinger Band resistance from the 5th day in a row, breaking the lower lows penny by penny. And as long as this resistance stands, the bears remain in full control. And it's driving the price slowly to the downside, tick by tick. So now we're looking at 789 and then 775 still. The only thing that the bulls have going for them is that they're not dumping once we break to a new lower low. That's it. Other than that, weekly time frame is weak, daily time frame is weak, tight channels, and no sign of the bulls anywhere. X on the daily time frame, bulls showing up a little bit further today after a strong day on Monday. What I want to see for the bulls is a break of 2256 to break this little lower high pattern that we saw back at the end of June, early July. And the weekly time frame, bulls trying to establish their higher low at 2067. Now they have to get over the 200-week moving average of 2309 to see a bullish MACD cross follow through and to see this oversold bounce really get some momentum, because as of this point, after 2 months of bouncing, there is no momentum here for the bulls, and it's a very weak bounce attempt. So still waiting for that 200-week moving average to become support. I personally don't like the bulls until that level is support. I want to be confident on multiple time frames in the direction of my trade, unless of course just day trading, which doesn't matter as much. But if I'm looking at swing trading bullish, I want the weekly chart to be bullish. And I can't call this weekly chart bullish as long as the 200-week moving average stands as resistance. CHK on the daily time frame, continuing to follow through with our higher low. So we're going to be looking for a equilibrium pattern to form from here. We have our high, low, lower high, higher low. We'll look to form a lower high compared to 514. Middle Bollinger Band resistance will perhaps be that target, 483 and dropping. And then we will see a break from this tightening pattern sometime perhaps next week. Might take a little bit longer than next week to dry out, or to play out, I should say. And from there, we will get clear direction for the midterm after we get a clear break of that tightening pattern, which we are anticipating to form. So the weekly time frame continuing to reject from exponential resistance. Again, on any time frame, as long as exponential resistance remains in place, the bears remain in control. That's on the 5-minute time frame. That is on the weekly time frame. Whatever time frame you're on, exponential resistance shows you strong trends. So I appreciate you watching. We'll continue to check back in on these bears. Twitter's no longer so much a bear. I'm keeping it on this list just because we've been following it for so long here. But the weekly chart is shifting some momentum here. So we know that we're watching the bulls on this name. Don't let the fact that it's on the bear list fool you. Hopefully you're listening to the words I say and not just going by the one word of the title of the list. Have a good night. We'll see you tomorrow.